There's a phrase you hear constantly in American politics. Left, right, doesn't matter. Everyone invokes it like it's sacred, the free market. But here's the thing. Most people who say those words have no idea what economists actually mean by them. And the people who do know, they've been counting on you not knowing for more than 40 years. Because once you understand what a truly free market would actually require and how far the current system is from that, you start to see the whole thing differently. Not as a natural force like gravity, but as a structure built by people for people, just not most of us.
Last episode, we sat with the feeling, the loss of a world that used to exist for working people. This episode, we're pulling back the curtain on the mechanics, the language that was weaponized, the history that was rewritten, and the moment, a very specific moment, when the rules of the game quietly changed. Chris, you open this chapter of the book with what you call the 5 assumptions of a free market. And you do something I love. You break each one down and show exactly how it fails in the real world. Let's start there. What does the free market actually mean when economists use that term?
Yeah, it's such a great question. So when economists use the phrase the free market, that is really just shorthand for 5 different basic assumptions. And without those assumptions, the entire theory that they use over and over and over again don't work. And so in anything economics related, you really have to understand what are the basic assumptions going into it. For the free market, the first one is simply that everyone in the market, both buyers and sellers, have access to all the relevant information. Yet today, anyone who goes and buys a car will know that the dealer has more information than the buyer. The people who are trying to trade stocks online as retail investors know that Wall Street banks have what they call dark pool trades that you can't get access to unless you buy into it. You have a whole bunch of financial instruments that most everyday people don't understand how they work. So that first assumption is just flawed in a lot of parts of our economy. The second assumption is that the market has many buyers and sellers. And this one can hold true for a certain market. In economic courses, you always talk about buying and selling ice cream, and anyone can come in and buy and sell more ice cream. But at the end of the day, there's some markets that don't have a lot of sellers. In fact, we have more and more monopolies in the United States than we've almost ever had before. You walk into a grocery store, you think you have all these different choices of food or products like toothpaste, and then you realize actually they're all owned by big conglomerates that aren't really all that interested in competing with each other. So you really have to wonder how true that basic assumption is. The third one is that supply and demand will determine a balance, which will determine prices. But if that was true in a free market model, then profits should be about zero or fleeting. And yet we have companies that end up earning record profits every single year. So that can't be true. And then you have a fourth one that is really just buyers and sellers operate anywhere and everywhere. This is really free access into markets and out of markets. But if you're going to buy a house, most buyers are not moving anywhere to buy the best house they can. They're buying the house because their work there or their family's there. Or, we still have local chains. We still have a whole bunch of things where that just is not true. And right now, especially with tariffs, like that is definitely not true. And if you look at the Trump administration policies on what they're trying to do with foreign trade, like that just isn't true anymore. And then the last one is competition drives innovation. And here you have a whole bunch of case studies of American big multinational corporations buying up the people, the very companies that they're supposed to be competing with. And we always hear this, especially in the tech world. It's the big tech giants keep buying up all the new technology. And is that really competition driving innovation, or is that big monopolies that have a whole lot of buying power preventing themselves from having to compete on the grounds of innovation. So when you look at those 5 basic assumptions that make a free market, they all fall flat on their face, but yet we still treat it as though it is the creme de la creme of our economic system.
I mean, if those are such big critical points that you've brought up, why is it that it's still having staying power in terms of what we consider the free market to be?
I think it has a lot of staying power for a couple reasons. One, in theory, it works. So if all those assumptions held true, then a free market economy would be the most efficient and effective economy you can have. And when we say the word economy, we really have to recognize that really what we're just talking about is millions upon millions of people making everyday decisions about how to manage their resources. So you need some food for tonight for dinner. What do you want to trade in lieu of that? And we have this great thing called money that allows us to be able to trade time for resources without having to find direct exchanges. And if those assumptions are true, the best way to do that is in a free market. The other part of this is the most powerful thing people have ever invented is a really good story. And the free market story is a really good one. And then you also have decades of being anti-communism as Americans. You have decades of being pushing back against socialism, which is more a cultural thing than a purely economic thing. And that story is now generational, and it gets passed down from one generation to the other. And it's just the third part of that. Like, my logic here is another part of that story is the myth that is America, that we're a meritocracy, that you can be whatever you set out to be. And for that to be true, you kind of have to be in a free market. Any other form of an economic system doesn't allow that to be true. So it's really, I think, a cultural story, and it's one that sounds really freaking good.
Wow. So let's go a little bit further into the point that you were making about the generational perspective and the yesteryear like feelings toward communism and socialism. Given the fact that what we know to be true of democracy today versus what people may consider socialism and communism to be, how does that differ from maybe the perception of communism and socialism as it was in the yesteryear when there was the previous generations still worried about that?
I think we have to be careful not to generalize all of American history into like either being anti or pro communism or any of that, right? It's one of the things is people, I think, would be surprised. I've done a lot of research into the history of religion in our country and how that has influenced politics. And during the Great Depression, so we're talking, 1920s into the 1930s, there was a huge movement of American, what we would call nowadays evangelical pastors across denominations pushing for socialism because capitalism has failed so bad. And you can go back, I don't know if you remember in like high school going to like microfiche and looking at old news papers, but you can go back and read sermons that were printed by pastors across this country pushing for socialism. There was a big pro-socialism movement back in the day, and that led to the New Deal ultimately, which is not socialism. And no one today with any sort of national power is at all pushing for socialism or communism, and we lose the textbook definitions for what these terms means because they're all about who owns the means of productions and who gets to control it. No one's really pushing for the government to own everything, right? But what does stick with us is this sort of, well, the Reagan-esque, the Soviets are communists and evil, and we need to push back on their evil empire. And at the end of the day, when you talk to everyday people, or all the 9,000 doors I've knocked on over the last couple of years, people really react viscerally to the term socialism or communism. But boy, if you start talking to them about what the rules of the market should be to make it more fair, they're all for it. If you start talking about a stronger safety net, generally people across the political spectrum who are working class people are all for it. So all that to say, I really think the history of these terms come with such a heavy cultural connotation right now. And yet when you look at the textbook definitions of what they actually mean, and then you realize like no one in American politics is really pushing for it. So it's kind of just a moot point, but it's one that can get a lot of clicks on social media.
That's wild. So it's legacy cultural interpretations of the terms that then gets driven into, is it, should we say propaganda? Is it too far to say that it gets propagandized at this point?
I think it depends on how you define the term propaganda, but if you define it in the term of creating narratives and using media outlets to tell a story that benefits the people in power, then yeah, it's propaganda.
Well, there we go. Well, you had one really provocative line in your book that talks more about corporations, right? And more about how basically functioning, corporate profit functions like a tax. And no one's
Yeah.
debating that either. Are you able to elaborate a little bit more on that?
Yeah. So let's put some big holistic numbers on it. And I'm going to round these off because they're such large numbers. But every year, the federal government collects somewhere around $4 trillion worth of taxes when it's all said and done, or 5 trillion, somewhere between 4 and 5 trillion. Corporate profits last time I looked it up, are about somewhere between $3.5 to $4 trillion. And if you go back to what I said about the free market, if it was truly a free market, then anytime a company was earning more profit, a new seller would come in and undercut them, and therefore bringing profit to zero or having profits be fleeting. With the entire economy producing trillions of dollars worth of profits, you just know that isn't true. And then you look at some individual companies, and this isn't to call out any individual company for being a bad or a good company. They're basically responding to the incentives that they have, and we could talk more about those in a minute. But a company like Visa and Mastercard is very close. They charge somewhere in the neighborhood of about 3% for every time you make a transaction. And then they have a profit margin of 50 to 55%, which means that every time you buy something, that 3% processing fee that increases the price that you're paying for everything you're buying when you use a credit card, even if you pay off your bill right away, is mostly going to corporate profit. It's not going to build new things. It's not going to offset costs or other people's salary. Microsoft, a company that makes computers and software, 35 to 40% profit. And then these companies who have these profit margins that are kind of outrageous. And by the way, profit margins from the 1980s to today have basically doubled. And companies were already making profits in the 1980s. It's not like they were going poor or going broke or anything like that. But in the last 40 years, these profit margins have doubled. And then you have a whole bunch of things that happen. And ultimately, companies look around and say, well, what are we going to do with all this money? And so every year for the last couple of years, we've set record numbers of what's called stock buybacks. And so a company like Microsoft or Visa or MasterCard, or honestly, most of the big companies, have so much cash coming in and that they don't know how to reinvest in their own company. They don't see the value in, increasing people's wages, they whatnot. And then they buy back their own stock, thereby driving up the price of their stock. And at the end of the day, like, that isn't a free market. That is us paying a corporate tax. But because we're in a society, it says companies can only maximize their profits. Everyone's just okay with it, even though it's close to the same level of scope as all of our government revenue together.
Is it too far to say that it's like corporate socialism? Like all the benefits are going to these corporations under the policies that we're seeing today?
I think where the term corporate socialism really comes in is from the sector I came out of professionally, which is like the military industrial complex sector, where the government will intentionally buy more tanks than we need to keep factories open because they want to keep them open. Or, well, every time we bail out a company that is failing, whether it's a bank, an automotive company, whatever, like, that is corporate socialism. When we produce a stronger safety net for the companies who are failing than we have for individuals who may slip up from time to time, that's corporate socialism. And it's interesting to me in politics, people get really riled up over things like student debt relief. Like, try to help a teenager with their student loans. That's too far. Helping these multi-billion-dollar companies from the bad decisions they made, all good. Like, that's corporate socialism for sure.
And it feels weird, especially given the fact that we've lived through the 2008 housing market crisis. we're now having a K-shaped economy. We talked about that, I think, in the last episode. I mean, why is it? What is it about human nature, do you think, that all of a sudden, as long as there isn't an actual face and a name behind it, the rules are different?
I think the part about human nature is, we as human beings like to connect with other human beings. And when you can't put a face to it and no company has a face to it, it's hard to connect with on like an emotional level. And, communication is about 7% the words you choose, and companies can choose words. But that means like 93% of communication is things like body language, tone, facial expressions, all that stuff. And the sort of sanitize, and I know both you and I have been inside corporations, like if you get the CEO to have coffee with you of whatever company you're at and just ask them like, hey, is this messed up? You will get a human reaction. You ask their PR department to put out a press release about what's messed up, it will be a very sanitized press release. And so I just think it's hard to connect with. And it's also, part of the underlying culture. This is what companies are supposed to be doing. And that's why I
Mm.
think it's hard to really step back and question it. And then even when you do, even when you're like, wait a minute, I think something is broken here, then there's this natural trap that we set for decades that says, well, anything different than this is socialism and bad. And so it scares people away, I think. And then we hide it all behind these technical terms, which is why in the book I tried to define it with just normal plain English. And it becomes really hard to question. Like I don't know how many different measures of profit are out there in economics or in just business accounting, but there's a lot of different terms and it's really easy to get confused. And so I would just ask everyone who's out there who kind of thinks this doesn't add up, trust your gut, learn the terms, and keep going.
So, to the extent that corporations don't there isn't a face in the name, there's less accountability as a result. And so, to your example of a student who needs help getting school loans, because there is a face in the name, there is accountability. Therefore, there's this thought of like, that's on you, kid. Good luck in
Yep.
this world that we're living in. Yeah.
Yeah. You shouldn't have messed up. You shouldn't have made that choice. You shouldn't have majored in history or art or something or philosophy that's hard to get employed in.
Was there any point in the past few decades that you would feel is like sort of like a turning point in that sort of mentality of, hey, it's more collective, we're trying to help individuals, versus, hey, this is more on you and go ride the waves?
Yeah, I think this is really about the 1980s at the end of the day. And we can look here in the United States at the 1980s. And to understand the 1980s, what I'm about to say, we have to understand the 1970s, which is also something that's about to become super relevant with the oil shocks that we're experiencing right now. And in the 1970s, you had a whole bunch of economic shocks. You had an oil shock, and we can all Google these pictures of long lines at gas stations. There wasn't enough gas to go around. You had an economic shock strong enough for the United States to come off the gold standard. And that was a massive economic shock. And fundamentally, the American government, especially under Reagan, said that the best way to navigate these economic shocks is to double down on the fact that, or what they believe to be true, which their belief is private companies can run things way better than the government can. So we should privatize everything. We should deregulate. And they passed a whole series of laws that basically deregulated a whole bunch of the government. So before the 1980s, it was actually illegal for companies to buy back their own stocks. We made it legal, I think, in 1982, but don't quote me on that. We deregulated our healthcare insurance companies. So in 1986, we passed a law that largely took the nonprofit status away from insurance and made it a for-profit corporation, which we can talk more about that in a future video. We really lowered the marginal tax rates for wealthy people and corporations a lot very quickly. And it was just in this overall philosophy that before the 1980s, a publicly traded company, had a balance between the value to the shareholders, always part of the equation, the long-term benefits to the employees, like pensions and everything else, the research and development, long-term growth of their companies, and the communities in which they operated. And that was the standard things that like CEOs and boards had to manage for. After the 1980s, the tax law changed to basically say companies have to only worry about maximizing shareholder return. That's it. And it started this entire era of shareholder supremacy, where everything they decide has to be done to maximize the value to the shareholder, which means maximizing profits. And then things like hostile takeovers in the 90s started to happen, and people started leveraging that law in different ways to reinforce that even more. So it didn't all happen overnight. But when you look at that set of choices and then you look at what other countries did with those same global economic shocks, and basically other countries like the Nordic countries, which people will call socialists, basically said, we actually need government to be better. And so they expanded their social safety net for folks. And it's a different economic system with a lot more guardrails. And if you look at the metrics of things like how healthy the populations are, how happy they are, and what they're actually producing and who's actually growing right now, like I think there's a clear winner and loser that most Americans would be really interested to learn more about in a future episode.
So it became not different, just better. That's really what we want. Correct?
Yeah. And I think, before you even start looking at Europe, like we can look back at our own country and what worked well when it was working. And before the 1980s, we had a pretty good distribution of wealth. We had companies that were making a lot of money. We had good innovation. We had a lot of good things going for us. There were still problems. We still had racial problems. We still had other problems. So it was not all rose-colored glasses, but like we can go back and look at what already worked well before 1980 if you want a sort of blueprint for what we should try next.
Well, so that brings to my mind, you have a table in your book where you're comparing a 30-year-old in 1955, 1985, and then 2023, assumingly not 25 because you were still writing the book. But
yeah,
what should we take away from that? Because it sounds very similar to the points that you're making.
Yeah, well, I think this is one of the things. The reason why I put the table in the book is trying to represent my grandfather's generation, my dad's generation, and then COVID kind of screwed up like what would be a reasonable like next generation. So I kind of picked 2023. Okay. But when you look at the table and just look at those three generations of someone entering the prime of their working years, you will see that, yeah, it kind of looks like my grandfather's generation or my parents' generation like earn less money. But when you start to adjust things for inflation and start to adjust things for both inflation and the sort of cost of major necessities, it tells a very different story. So yeah, my grandfather made a decent amount of money as a factory worker, but compared to someone coming of age sort of today, it's basically a very similar income across the board per worker. But yet homes are 6 times more expensive. College is 4 times more expensive. Healthcare has gone absolutely through the roof. And so when you look at sort of the next generation, Gen Z, Gen Alpha, it kind of makes sense why Gen Z is 41% of them run out of money monthly. 25% have gone more than a week without affording essential things that they absolutely need to afford. The Gen Z unemployment rate is more than double the national unemployment rate. And part of that's an AI story, but part of that is also just how expensive things have gotten because companies are trying to make as much profit as they possibly can. So, again, when my grandfather was entering the prime of his working years, my dad was entering the workforce, Reaganomics had not taken hold yet. And they are just living in a very different economic system than what we're experiencing today. And it's real, and you can just see it. And when you look at the numbers side by side, I think it tells a story for you.
Yeah. So we're saying basically that the scales between the government, the corporations, and the people are right now just out of balance because people are losing in that delicate back and forth that needs to be maintained. And honestly, this sounds pretty bleak. Is there a way out of that dynamic?
There absolutely is. And this is a point I really try to make seriously in the book, is that once you really understand that how we got to this bleak moment in time was because of specific decisions that were made to create the system engineered to do exactly what it's doing, I hope that people can feel empowered to know that there are different decisions that we can make to re-engineer the system to produce something more fair. And it's not about free market or capitalism versus socialism. It's really about the guardrails and rules of the economy and whether or not they benefit people that have all the money already, or they benefit people trying to earn money while they're working. And call it whatever you want, but there's a lot of things we can do looking at our own history before 1980 to get back to a structure of an economy that's still free market economy at its heart, but with more rules to make it more fair. Things right off the top of my head: We can make corporate buyback of their own stocks illegal again. Simple to do. We can readjust the marginal tax rates to be way more fair. Just as two brief examples, there's a lot we can do. And we don't have to look to Europe to even get started. We can look at our own history.
As you're speaking, I just have certain questions running in my mind, just about the fact who's writing the rules of the road for the economy at the end of the day, who they're serving, and how is that being built into the taxes, the regulations, and the entitlements. It's a lot to try to understand from, our own individual levels versus this giant system that now we're realizing is in fact out of balance.
And that's exactly it, right? I'm like, the answer isn't inevitable. It isn't natural. We didn't have to end up here. And it wasn't handed down by some economic force that we can't have any say in. It was very intentionally designed to be this way. And it was done so in committee rooms in Washington, D.C. It was done so in boardrooms of corporations all across this country. It was done by lobbying forces. And it was done over a very specific time period that we can learn from by people with a very specific agenda that they have been enacting for the last 40 years. And if it was engineered to be this way, it can be re-engineered. And that's what the next episode that we're going to dive into is really all about. It's not theory, not someday, but a real concrete, real world playbook for what actually changes this and why it's more achievable than most people think.
Looking forward to that conversation. For everyone out there, thanks for being here, and we'll see you next time.